this company that makes drones for the actual U.S. Army. Yeah, like military drones. And their stock just jumped 33% in 2 weeks. Wild, right? But here's the twist. Every analyst out there is saying, sell it. Wait, what? A company landing Army contracts and everyone's telling you to run away? That doesn't make any sense at all. So I dug into this thing for hours, and what I found is honestly pretty crazy. Let me walk you through it. The company is called Draganfly, ticker symbol DPRO if you want to look it up. They build drones, big, heavy lift ones, small first-person view ones, and they just got picked by the U.S. Army to supply drone systems. That's huge, right? Like that should send the stock to the moon. And it kind of did. The stock shot up from around $5 to over $8 in just a couple weeks. Everyone online was freaking out. Reddit threads going nuts. Day traders piling in. Looked like the perfect breakout story. But then I started looking at the actual numbers. And this is where it gets interesting. Last year, Draganfly made about $6.5 million in revenue. $6 million for the entire year. That's smaller than most local car dealerships. We're talking about a tiny company here. But here's the kicker. They lost $14 million. Yeah, you heard that right. They made $6 million and lost $14 million. That's like if you earned $6,000 at your job, but somehow spent $20,000. The math just doesn't work, does it? So how are they still alive? Well, they raised a bunch of cash earlier this year. They had about $22 million in the bank by June. That buys them some time. But time to do what? That's the question. Now let's talk about what they actually sell. They've got this drone called the Commander 3XL. It's a heavy lift beast, can carry serious weight. They also have this thing called the Flex FPV. That's the one the Army just ordered. FPV means first-person view. You wear goggles and fly it like you're inside the drone. Pretty cool, right? They also have this mesh communication system. This is actually clever. Most drones need GPS to work. But what if you're in a war zone and the enemy jams your GPS? Game over, right? Not with this mesh communication system. The drones talk to each other and create their own network. No GPS needed. That's legitimately innovative. So the tech is solid, no doubt. The contracts are real. The Army wants their stuff. Then why is everyone saying sell? Let me break it down. Right now, the stock is trading at roughly $7. The company is valued at around $150 million. Remember, they only make $6 million a year in revenue. So you're paying $150 million for a company that brings in $6 million. That's a 25 times multiple. Think of it like this. Imagine your friend has a lemonade stand. They make $6 a day, and they ask you to buy the stand for $150. Would you do it? Probably not, right? Because it would take you like 25 days just to make your money back. And that's if they actually make a profit, which Draganfly doesn't. The company is still losing money, a lot of money. And analysts don't think they'll be profitable anytime soon. Best case scenario, they lose less money next year, but still lose money. Now here's where it gets even weirder. The stock has something called a beta of 2.45. What does that mean? Basically, if the overall market goes up 1%, this stock goes up about 2.5%. Sounds great, right? But it works both ways. If the market drops 1%, this thing can drop 2.5%. It's like riding a motorcycle with no brakes. Super exciting until it's not. And get this, over 33% of the stock is being shorted. That means a third of traders are literally betting this thing crashes. They're borrowing shares, selling them, and hoping to buy them back cheaper later. That's a massive short position. When that many people are betting against you, it's usually not a good sign. So what's actually driving the price up? Honestly, it's mostly hype. News releases, social media buzz, day traders chasing momentum. The U.S. Army contract sounds amazing in a headline, and it is genuinely cool. But the contract details? We don't know how much money it's actually worth. Could be huge, could be a few $100,000. Nobody knows yet. There's also this landmine detection project they're working on. They partnered with another company to build drones that can find landmines in war zones. That's incredible technology, like genuinely world-changing stuff. But again, it's not making the money yet. It's all future potential. You see where this is going? Everything about Draganfly is about the future. What they might do, what they could become, the contracts they might win. But right now, today, They're a $6 million a year company losing $14 million, valued at $150 million. The analysts see this. That's why their price targets are around $6. Some say $6.50. Nobody's saying it's going to 10 or 15. They're all saying it's overpriced right now. But wait, doesn't the Army contract change everything? Maybe. If it leads to more contracts, if they can scale up production, if they can control costs, if they can actually turn a profit. That's a lot of ifs. Let me give you another analogy. Imagine you're scouting a basketball player. The kid's super talented, made the varsity team, got noticed by a college recruiter. That's awesome. But would you bet your life savings that he's going to the NBA? Probably not, because most varsity players don't make it to college ball, and most college players don't make it to the pros. Potential is cool. Results are what matter. Draganfly has potential, real potential. The drone market is exploding. It's supposed to hit $14 billion by 2030. Defense spending is going up. Landmine detection is a massive humanitarian need. All of that is true. But potential doesn't pay the bills. And it definitely doesn't justify a stock price that assumes everything goes perfectly. Now let's talk about the risks, because there are a lot of them. First, they need more money. They're burning through cash. When they run out, they'll have to raise more. And how do they do that? Usually by issuing more shares, which means your shares get diluted. It's like if you owned 10% of a pizza, and then they made the pizza bigger but didn't give you a bigger slice, you still have the same slice, but it's worth less now. Second, execution risk. They need to actually deliver on these contracts, build the drone, ship them on time, make them work in the field. Any screw up and the Army could walk away. Third, competition. The drone space is getting crowded. Big defense contractors are getting into this game. Companies with way more resources and experience. Draganfly is tiny compared to them. Fourth, geopolitics. What if defense budgets get cut? What if priorities shift? What if another company builds better tech? There are so many things outside their control. And finally, volatility. This stock swings like crazy, up 33% in 2 weeks. Sounds great, right? But it can just as easily drop 33% in 2 weeks. That's not investing. That's gambling. So here's the bottom line. Is Draganfly a scam? No. They're a real company with real tech and real contracts. Is the stock a good buy right now? Probably not, at least not at these prices. If you already own it and you're up big, maybe take some profits. Lock in the win. If you're thinking about buying in, you might want to wait. Let the hype cool down. See if they can actually grow revenue and move toward profitability. See if the Army contract leads to more business. Or, if you really believe in the long-term story, maybe wait for a pullback. Analysts are saying $6. Some models say lower. Why pay 7 or 8 when you might be able to get it cheaper in a few months? This is one of those situations where the story sounds amazing, but the numbers tell a different tale. And in investing, numbers usually win. Hype fades. Math doesn't. So, there you go. That's the full breakdown. A tiny drone company with big dreams, a hot stock price, and some serious red flags under the hood. Pretty wild, right? If this helped you dodge a bullet or think twice before jumping in, awesome. That's what I'm here for. Stay smart out there. Don't chase the hype. And always check the numbers before you risk your money. Catch you on the next one.